Hi, folks. Welcome to the Weekend Investing Daily Bite of Thursday, 30th of October. We are nearing the end of the month. So, the FOMC meet happened last night for us, the FOMC US interest rate meet, and they've cut by quarter percent. But while cutting, there was dissent in the FOMC committee, and they have sort of said that December cut is not clear yet. Now, what has also happened in the US markets is that the government is still continuing under shutdown, where no new report, no new data is coming out of the government. So they don't know where inflation is going, they don't know where the unemployment is going because the government, barring the essential departments, are shut. So usually the interest rate committee takes these data points into consideration before announcing what they're going to do. But this time, since the government was shut down, they are shooting in the dark. Um, Immediately on announcement of this rate cut, there was a sharp sell-off in risk-on assets. Very unusual, actually, or but maybe it was a sell-on news kind of a event where already some build-up had happened. So gold, silver, and many emerging markets fell off. India also fell off today, and the currency, the USD INR also went much higher. So rupee lost against the dollar. So uh, it is very, you can say, uh, unexpected. But if you see the buy on rumor, sell on news adage, then this was expected actually. So let's look at some charts and see where the markets are going or actually not going right now. Disclaimer as always, please read fully, understand it, and only then move forward in the video. Do subscribe to our channel. My team is working very hard on the content to bring you path breaking content pieces, and doing a lot of uh, you can say data mining to get to insights that we are able to get to. So my submission to you is to subscribe to the channel. About 50% of people who are watching the channel regularly have not subscribed, so please do subscribe to the channel. We are also incidentally very close to the 100,000 mark, which is a very good destination for any YouTube channel. So that encouragement will also help. If you can help us get there, probably we'll reach there this week itself. Where is the market headed? Markets is headed nowhere right now. We have now spent last 7 sessions doing nothing, bobbing up and down. So we had a down move, then we had a nice up move, and today we had a down move. So it is consolidation, somewhat like this, that is happening here. And post this consolidation, there is a potential that we go up. But let's see what that will, what event will make us do that. Maybe the event of US India tariff deal was causing this rally to happen. That seems to have softened off for now. uh, let's wait and watch. Nifty 0.68% down for the day. Nifty Junior down marginally at 0.22% after a good run yesterday. Mid caps marginally down 0.16%. Small caps absolutely flat, 0.07% down. Bank Nifty down 0.6%. So the larger part of the fall was in the larger caps in the market. So likely that some FI selling probably has happened today. Gold is starting to make a comeback. It's up 2% from yesterday. We are now back again at 12,084 per gram, and that translates into 1,20,840 per 10 grams. So this is a very nice price correction that has happened after this run up. There is a potential that we will retest this high and try to break that. I think so. But then if we don't cross this 12,500 odd mark soon, then there is a potential that we may consolidate even more. My own sort of worst case scenario is that we reach somewhere near 110 for this move. Silver is also looking up, 1.67% up, not really out of the clutches of this consolidation, but 2 days of good move. We're now back at 145,697. This is the chart which is a bit of a bother. USD INR, where in the last 3 sessions we've gone from 87 again back to, sorry, 87.70 to about 88.63, and we are again very close to all-time highs. So I was expecting that, after this sort of a head and shoulders pattern, we will break down, and we'll probably go towards 86 and a half, but that has not happened. And in fact, this right shoulder high getting broken probably means we are going to a new high on USD INR. Let's see where that goes. Advanced decline trends very, very flat through the day. 184 advances only to 316 declines, and pretty much a wash with red, with pharmas taking a big hit. Sun Pharma, Dr. Reddy's, and Cipla all down. Bharti Airtel down. HDFC Bank, ICICI Bank, Reliance, Infosys, all biggies were down. Some were flat. In the Nifty Next 50 space, also Canara Bank stood out at plus 3%. Enrin, Adani Green, Divi's Lab, BPCL, and Hyundai. These were also in the green. The rest you can see many stocks in the red: Shree Cement, Vedanta, Zydus, DMart, HAL, LIC, but marginally only. There was no big shocker down move as such. In the movers of the day, we had Web of Global move up big way. We gone from 230 to 274. Uh, Good profit rise of 71% and some dividend announcement. And another move was in Policy Bazaar, which is plus 7% again post the Q2 move on strong insurance growth. In the sectors, no major sectors gained as such. We had only 0.15% gain on tourism, but on the selling side, you had services sector down 0.8%, which is also not so much. Financial services 0.7%, private banks 0.7%. We'll see the monthly figures tomorrow, but this was the somewhat of a losing day for all sectors today. Service sector 0.84% down was led by HDFC Life Insurance, Bharti Airtel, Indigo, Avenue Supermart, and Power Grid in that sector. US markets, and this is mostly, you can say, prior to the uh, interest rate cut announcement. Nasdaq up 0.55%, but Dow Jones down 0.16%. S&P 500 was probably flat. The larger part of the market, the Russell 2000, down 0.87% there. Some of the stocks which are running very, very hard are Caterpillar 11.6%, Palantir 4.8%, Broadcom 3.49%, Nvidia 2.99%, and Alphabet 2.65. The disclaimer here is that our the weekend investing US portfolio has some of these stocks in its portfolio. Tweet of the day: copper has hit a record. So I think this is very uh, usually the trend that whenever copper hits new record highs, it means that the entire commodities complex is starting to go up. And we've seen in the last few days how metals have been rising in our market, whether they are steel stocks, whether they are aluminum stocks, zinc stocks. So it seems like the commodity complex itself has started to rise, and copper is actually the biggest leader of that complex. Gold and silver are, of course, precious metals. It is slightly nuanced, separate category. But industrial metals, whenever copper starts to hit a record, it means the demand supply on copper is tight, and there is more demand than what is being supplied right now. Um, Nvidia stock hit a new high yesterday, and it hit $5 trillion. Now, one should just take a step back and allow that scale of a mammoth market cap to sink in. What does $5 trillion mean? Our entire market cap, all stocks listed, are 5 point some trillion only. So this one company in the US, which has risen like 400 times in the last 10 years, is now being valued at something similar to the India market. That is the scale of confidence right now on Nvidia. Whether it will go up or down, I cannot comment on that. But just see the enormous wealth creation prospect that exists for any stock. I mean, this could happen to any stock tomorrow. And many other stocks are also hitting the $4 trillion mark. Just a few years back, $1 trillion market cap used to be huge, and now we're talking about $4 and $5 trillion. So essentially what you are saying is that value of money is dying. We may be calculating in dollar terms, but the dollar itself is in a state of demise, gradual demise, and hence everything else will look like it's going up. So very nice analogy somebody had mentioned to me recently, that if you are an asset holder, you are like a person in the Titanic which is sinking, and the lighthouse that you see on the island is the dollar. So you, as you are sinking, you feel like as if the dollar is going up, but it is actually the dollar going down. So from that perspective, I mean, the entire, all these asset classes rising, even real estate for that matter in India, or gold in rupee terms, it is rising hugely because the basis on which we are calculating that, the money base, that itself is getting destroyed because of the 350 trillion dollars of debt and so on and so forth. So I think absolute numbers, absolute valuation of something has lost meaning. So whenever we used to say 10 times earnings, 20 times earnings, that is losing meaning, because if everything is going to be at 50 times earnings, it will never come to 20 times earnings. Then that becomes the new base, and only relative comparisons can be done, because the money has become so cheap anyhow. So we are going to do a very special episode post this, where we're going to talk about the potential of a dot-com kind of crash happening, and what are the signs, how we can protect ourselves, and are there any similarities in today's market versus the dot-com crash of 2000. So you can watch this episode later today. If you like this video, do like and share this video, and do, of course, as I mentioned earlier, do subscribe to our channel. Thanks. Bye.